Rhiannon.
Thank you, Chair. In relation to your investigation into mortgage fraud, which APRA has not made public, has APRA found any evidence of illegal misconduct in the mortgage market by the major lenders?
So I wouldn't say what we've done is specifically a review of mortgage fraud. We've looked generally at lending practices across the board and the controls that banks have to make sure they get accurate information from borrowers, etc., and make a reasonable assessment of a borrower's ability to repay. Part of that are controls to make sure borrowers give true and fair information, but that's not the entirety of the exercise. The second part of your question, if I had it right, was have we identified any
Any evidence of illegal misconduct?
Illegal misconduct, not at this point. There's nothing that's been brought to my attention.
Well, brought to your attention, is it anywhere else within the organisation?
Well, I'm sure if someone had something of that nature in APRA, I'd know about it.
Do you need to take it on notice?
I'm happy to take it on notice.
Okay, thank you. And has APRA already provided this research or findings to the Royal Commission?
I'm not sure that the Royal Commission wants people to know what information we have or have not provided, but I can say that if they asked for it, we would obviously give it. We would give all information that we were asked to give.
Shouldn't you also be proactive in providing the information?
We'll wait and see what the Royal Commission asks. We could give them a whole raft of information, swamp them with things that are not relevant to them. So we are talking with the Royal Commission about the issues that they are interested in. They have approached us for not just for documents, but for discussions on particular issues to improve their understanding, and obviously we're standing ready to help them as and when needed.
Has APRA in the last 5 years ever held back information from the public? I'm referring to information on a bank that APRA has identified as breaching mortgage lending laws.
I don't think so, but I'll take that on notice. I do have to say, though, we have quite strict secrecy provisions that prohibit us from talking about information relating to individual institutions in the public. But if there was something that was a breach of the law, a clear breach of the law, then those issues would be, at the very least, handed over to other regulatory authorities. So.
But you'll take that on notice, because I didn't ask for a specific bank. I just said a bank that APRA has identified as breaching mortgage lending laws. So you'll take that on notice?
I will take that on notice.
Thank you. And I'm interested, how do you actually choose to disclose or not disclose such information?
Well, generally the disclosures we make are not about individual institutions because of Section 56 of the APRA Act, which makes protected information, as a general point, we're unable to disclose protected information, which is information about the affairs of an individual institution. We tend to talk through our discussion papers, through speeches, through other things about observations at the industry level.
Okay, thank you. What does it say about the job you are doing with mortgage fraud that the Royal Commission has prioritised this as the first issue that they are looking at?
Well, look, I mean, we have said, I've said before this committee about 3 years ago that we were unhappy with mortgage lending standards. We thought they had got to very low levels and in some cases lacked common sense. I can understand why the Royal Commission would think this is an area they want to look at. It's also the largest asset class on the balance sheet of the banking system, so if you're going to look for something that's important to the stability of the system and where most consumers are interacting with the banking system, it's an obvious place to start.
Is it also because you've been too slow to act on this? Is that a factor?
Oh, look, we've devoted a lot of resources to this over the last little while. I think you can always say, with the benefit of hindsight, that when regulators have to intervene in the way we've intervened, that with the benefit of hindsight you wish you'd done something sooner. That doesn't mean what you did at the time you made any particular decisions was, or didn't act, was necessarily the wrong decision. So, of course, you wish you had got on to issues earlier. That's that's always a regulator's dilemma.
So you do think you should have got onto it earlier?
No, I've said before, I wish we had, but you make decisions on the information you have at the time. The more we've looked at this, the more we've dug into it, the more we've identified the need for improvements in the industry.
So do you think that banks are the target of the Royal Commission, or is it your lax regulation like these failures?
No, that's a question for the government.
But you could comment on it.
Well, there's a terms of reference, there's an item within the terms of reference that invites the Royal Commission to comment on the effectiveness of regulators, so I'm sure they'll do that.
Thank you. If we can't trust the banks to be honest with the information they collate to provide to you, what implication does this have for our understanding of financial system stability?
I'm not sure of the first premise that says we can't rely on the banks to be honest about information they supply to us.
So you're satisfied with the information they provide to you? I thought that was...
At a general level, yes. There's certainly we've got substantial information gathering powers if we need to use it. There's been improvements needed in bank reporting in recent years, but it's not been a case of deliberate misreporting or other sorts of things that might suggest any sort of untoward behaviour.
In a report in August last year by LF Economics, a macroeconomic research body, they made this statement. The unfortunate reality for victims of mortgage control fraud is that our regulators do not investigate allegations brought to their attention despite forensic evidence, paper trails, demonstrating evidence of fraud. The evidence strongly suggests the regulators have done nothing to combat white-collar criminality in the mortgage market. Now, that's my reading of that. It's a very serious allegation that points right at APRA from a research house that has spent a few years researching illegal conduct by mortgage lenders. Is there any truth to their opinion?
Well, to the extent that there were shortcomings in the way banks had been making credit decisions, as I said, we've been working to get those credit standards improved. When it comes to meeting responsible lending obligations to individual customers, that's primarily ASIC's responsibility. The responsible lending laws are enforced by ASIC, so we work together on this issue. But as I said, we've spent a lot of time focused on this issue over the last 3 or more years, in fact, devoted a very large amount of resources to it, and it's probably been one of the biggest commitments we've made.
So I'll just go back to the question again. I asked, is there any truth to their opinion? The way you answered it, it sounded like a yes. I don't have their report in front of me, so I'm not sure of their precise opinion. If they're But I read it out quite clearly, and I'm happy to read it out again.
Could you, please?
The unfortunate reality for victims of mortgage control fraud is that our regulators do not investigate allegations brought to their attention despite forensic evidence, paper trails, demonstrating evidence of fraud. The evidence strongly suggests the regulators have done nothing to combat white-collar criminality in the mortgage belt.
So the particular conclusion there that regulators have done nothing, I think is clearly wrong.
So in terms of the statement, though, the way you have answered it in the more fulsome way, it sounded as though there was agreement or considerable agreement. Is that a fair comment?
No, because I think issues around, as I said, it's difficult for me, and there's a subtle but sort of important distinction. Issues around lender fraud are largely the ASIC responsibility. We've been focused on potential fraud by, mechanisms by which banks prevent fraud by borrowers. We work together on those issues, but again, I would make 2 points. First being, we have recognised that there's a need for improved standards in the industry, and we've been slowly but surely seeing that improvement. But I would certainly reject the idea that there's been no action at all.
I won't push it any further, but when you say that have recognised the need for improved standards, certainly suggests that you have some common position with that. In Britain, their financial regulator has capped mortgage lending to borrowers at 4.5 times their incomes. Should there be a similar cap on mortgage loan to income ratios here in Australia?
We've certainly contemplated that, but decided that wouldn't be one of the tools we used at this point in time. We do keep track of it, and it's one of the charts on the bottom right-hand side of the charts that were attached to my opening statement. I don't have the 4.5 times, I have 6 times figure. We flag that as something we watch carefully because we do think that's a higher risk, obviously, form of lending. The reason we haven't gone down that path and we've chosen to use other methods is, in fact, the loan-to-income ratio is it's not the best measure of borrower leverage. What you actually would like to know is the borrower's total debt rather than just the individual loan. Unfortunately, up until now, we haven't had a way in which banks can identify a borrower's full set of liabilities. I've called that previously a blind spot that exists in the system. The new comprehensive credit reporting regime that the government is mandating will help fix that blind spot.
Thank you. Chair, I just had 2 short questions. And then I'm finished. Could I do them, please?
As long as they take less than 2 minutes, yes.
Okay, thank you. If APRA were to hypothetically ban lenders from providing property investors loans to purchase an investment property where the rent will not cover the interest repayment costs and other running costs such as negative gearing, would this make house prices more affordable and reduce risk?
I think
that's
beyond hypothetical, Senator Rhiannon.
And Melbourne
hypothetical questions.
Housing markets. Okay, does APRA have data on what the average cash, not equity, deposit relative to the size of the purchase price is in Sydney and Melbourne?
I'll take that on notice. We may have, but I'd have to take that on notice. Particularly, I'm not sure that we have city-by-city data, but I'll take it on notice.
Thank you, Senator Rhiannon. Senator